Why more Americans are reconsidering the Midwest as a long-term bet. For years, conversations about opportunity in America have revolved around coastal cities. High salaries, cultural density, and perceived prestige kept places like Los Angeles, New York, and Miami at the center of the national imagination. But beneath that narrative, a quieter shift has been taking place, one driven less by aspiration and more by arithmetic. Across the country, households are reassessing what making it actually means. The question is no longer just about income potential. It's about whether day-to-day life feels sustainable. Housing costs, utilities, insurance, childcare, and basic services have steadily consumed a larger share of earnings, even for people who once considered themselves solidly middle class. In that recalculation, the Midwest has re-entered the conversation, not as a backup option, but as a rational choice. Affordability is no longer a side issue. Cost of living has become one of the most defining pressures in American life. Housing, in particular, has shifted from being a long-term wealth builder to a recurring source of anxiety. In many regions, even modest homes now require income levels that far exceed what local economies realistically support. This imbalance has fueled frustration not just among renters, but also among would-be homeowners who feel locked out of stability. Political debates increasingly reflect this tension, but the economic reality exists regardless of party lines. Against that backdrop, the Midwest stands out for one simple reason: the numbers still work. Home prices in much of the region remain below the national median, and rents, while rising, have not reached the levels seen in coastal metros. That alone would make the area attractive. But affordability doesn't mean much if wages stagnate. Historically, that trade-off defined the Midwest: cheaper living, weaker income growth. That equation has begun to change. Wages and costs are moving in the same direction. Over the past year, wage growth across large parts of the Midwest has shown a steadier trajectory than in many other regions. While paychecks may not always match coastal tech or finance salaries, they increasingly align with local costs in a way that allows households to breathe. When income growth and housing costs move in parallel, something important happens. Discretionary spending returns. People are able to plan, save, and occasionally spend without every decision feeling like a risk calculation. That dynamic matters more than headline salary numbers. A lower nominal income paired with manageable expenses often results in a higher effective standard of living. A regional economy built on stability, not hype. One reason the Midwest maintains this balance is its economic structure. Manufacturing, logistics, healthcare, and applied engineering still form the backbone of many local economies. These sectors may not dominate national headlines, but they provide steady employment and predictable wage ladders. In many Midwestern communities, housing costs remain low enough that even single-income households can realistically own property. Dual-income families often find themselves with room to upgrade, rather than feeling permanently stuck. This doesn't mean the region is immune to pressure. Increased demand, especially from remote workers relocating from higher-cost areas, has introduced competition into local housing markets. Prices have risen and inventory remains tight in some pockets. But even with those pressures, the gap between earnings and expenses remains narrower than in many parts of the country. The remote work effect. Remote work has accelerated the Midwest's appeal, but it didn't create it. What remote work did was remove geography as a constraint for certain professions, allowing people to keep national-level salaries while relocating to lower-cost regions. For many households, that shift results in an immediate upgrade in quality of life, larger homes, lower monthly bills, and reduced financial stress. In some cases, families who felt perpetually behind suddenly find themselves ahead. This migration also brings challenges. Local residents can feel priced out as competition increases, and policymakers face the task of encouraging growth without undermining affordability. New housing construction has become a priority in many Midwestern cities. not as a speculative play, but as a defensive measure against displacement. Growth without decline. Low housing costs are sometimes associated with economic decline or population loss. That narrative doesn't fully apply here. Many Midwestern metro areas continue to grow modestly, keeping pace with or outperforming state-level trends. The growth isn't explosive, and that may be part of the appeal. Instead of boom and bust cycles, these regions tend to evolve gradually, absorbing newcomers without dramatic swings in infrastructure or pricing. For middle-income households, that predictability is a feature, not a flaw. Redefining the American trade-off. The Midwest's resurgence reflects a broader shift in how Americans define success. For decades, the dominant model prioritized location, career prestige, and upward mobility, often at the expense of financial comfort. Today, more people are questioning whether constant financial strain is a necessary cost of ambition. In regions where homeownership is still achievable, where savings feel realistic, and where life doesn't require maximum optimization just to stay afloat, the value proposition changes. The Midwest offers something increasingly rare: economic normalcy. The bottom line. The renewed interest in the Midwest isn't driven by nostalgia or novelty. It's driven by math. As affordability pressures intensify nationwide, regions that allow income, housing, and lifestyle to coexist sustainably gain an advantage. The Midwest may not promise the fastest climb, but for many Americans, it offers something more valuable: a stable place to land. And in an economy defined by volatility, stability has become a form of wealth.